Good morning, traders. Good morning. So, I'm going to outline why market trends in a simple way. So, please don't forget to click subscribe and like or share this video. So, and comment if you need any, any question. So, now I'm going to cover basically of market structure. So, when I'm talking about basics of market structure, we all know that. And let me share a white keyboard. Let me share a white. We all know that market when it's moving or flowing in a certain direction, it moves creating high and low. And upon high, there's a higher high and there's a higher low. There's a higher low. So basically, this is our high. This high is higher than this high. That's why we call it a higher high. Then this high is lower than that high. That's why we call it the high low. So basically, the market creates higher highs and higher low. So what I'm talking about when I say it create high high, for example, there's a downtrend. Now the market, let me make an example, there's an upper trend. Now the market start going down. Then we got our high. Then the market go up, decide to go up, and kill this high. We got a higher high. This high is higher than that one. Then the market go down and go up, created a higher low. I mean, created a low, but you're not focusing on lows. Let me erase this one. Let me erase even this one. The market went up, created a high high, and went down, created a high here, and went down. Now this high is lower than this high. That's why we call it a high high. This high is this high is high because it was high current, then it was broken. Now it created a high. This is our high, this is our high high, this is our high low. This high was created, this was high high, the high was killed. So that's why we call this one the high high. This high is lower than that one. So basically when the market moves, create high highs and high lows. So moving forward to low, we got a low, got lower low, got higher low, or they say lower high because we are dealing with low, we can't say high low. We say lower high. So it's one same thing when we create the what you call lower high. Remember, in a lower high, it tends to be a downtrend, then it start to going up, we got our low, then go down below that low, we got our lower low, lower low. Now it go up, then come back, then go up. Now it create our lower high, sort of head and shoulder pattern created because of higher lows, of lower high and higher highs, all of those type of things. So basically, when we are trading a market that's move with the wave. This is a normal market, or this is a textbook dot of market, textbook teach such market. We got low, we got high, we got low. Oh, I mean high, low, high. We got higher, low, or lower high. Let's use the concept lower high. Yeah, we got lower high, lower high. We got higher high. We got lower high. We got higher high. So market moves with high and high lows. Basically, the textbook not showing a wave or trend line that a trend line of trend move like this. But in 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 reality, you will find out that the trend is moving like this, not straight with the upper trend straight, but move like this. Maybe starting going down, if it go down, going there and there, moving up, down, moving down, up. So, but what it it does, it continue to break the highs. The highs became broken. Highs became broken. Though here it failed to break the high. The high became broken. Even here it failed to break the high. Here was broken. So here's the key thing about when you are trading sideways. Remember that you got our kilo. For example, here we got our key high, but we didn't know that we'll have that high over there. So we can't anticipate that. We had our kilo here, got our key high here. So we got our lower high here. So moving forward, this was our key high low, then that was our key high. So the market created a lower high. We know that when the market creates lower high, it's waving up. So it broken our high. Now we created another significant high here, which is a high. This is our current high that we're dealing with. Then we move our current low. Remember, this is our key low. We use this low that is weak, but according to trend, line of trend, we can use that low continuous because the market is going up and it's been breaking high and high. So here's our kilo. As long as it didn't break this low, we are still looking for a line of trend, which is the upper trend. Because it didn't break that low, we're looking on line of trend, which is the upper trend. So moving forward, this thing, it created a high, created lower high, created higher high, created lower low. This low is lower than this one. It created higher high low. This high is higher is lower than this one. So basically, when they create high low, we know that the market will sell. So our take profit is supposed to be here. Since the market didn't come to beat this low, now we move this low. We move from this low to use this low as our key low because it failed to break this low. But going up, it was busy breaking highs and highs. So that's how we use uh, high and lows in market structure. Basically, they call it breakout of market structure. So it's opposite with a sell. Let me share back chart and take it to reality on what am I talking about. And share basically let's use a bigger time frame like H1 or bigger than H1. So yeah, moving forward, let's find the trend. Oh, here is the trend. So let's first start and see. Let's start the trend where the trend is starting. And not start. Remember that when you're looking for a trend, you can't start a trend at the mid, but you must start a trend where the trend starts to change. For example, here we've got our upper trend. We're looking for upper trend here, a trend breakout around here. So now we want to understand what happened around this area. How did the market turn from the bullish market to a bearish market? We zoom. Let's start. Let's start here. Let's start here. We got our low and we got this high. And the market moved up, hit our high. Remember that it moved with a wave. We got a high and low. Hit our high, created a higher high. It moved down, created a higher or a lower high. Lower high. Let me fix that one. It's not a higher low. It's a lower high. This low is higher than this one. They move up. Let me raise this one and try to find whether did they break the high or not. They didn't break the high, but they didn't even move further or move that much to show us whether they create a high. Let's say they created equal high. Here over here, they created almost equal high. They created almost equal low. Then they went up, created what higher high. So you see the wave high, low, high, lower high, higher high. Now the market went down. They created what you call a lower low. This low is lower than this one. Then automatically when the market creates lower low, we know that the market is likely to change to a downtrend. Then they move up again. They created a higher low. I mean, they created a higher low. This high is lower than this one. So now we know that the market is going down. They went down. They went down. After they went down, they created a lower low again. That's confirming. Remember that market structure that was broken. There was a market structure that was broken. All of those type of things. So you see, how did they change the market trend or the market direction to a bearish market? Since they created high, they went down, created low, went up, creating high, which is higher than this one. They went down, created lower high, which is higher than this one. They went up, created high, which is higher than this one. They went down, created lower low, which is lower than this one. They went up, created high low, which is lower than this high. So now they created lower low, which is lower than this one. Then now we look for a sell after they created this low. How do we look for a sell? We look for significance of whether any price action you can find, support and resistance, whatever strategy you are trading on. So we'll be dealing with more how to take entries or how to make entries on the next video. For now, if you have questions, you can comment on below video and try to subscribe for me when I post video to my channel to get a notification. So moving forward, let me say this, moving forward, you see what happened after that, the trend changed to a downtrend. Simple like that. So moving forward, still a downtrend, still low, still low, still low. It's still even low even now. So you see, that's how we see the change of market structure, or how does the market structure change from a sell to a buy. Even here is opposite. Even here is opposite. Let me try and make another example. Try and make another example. So here we got our low, we got our high, our low. So now we are using these two as our significant high and low. Since we got low, since we got high, now the market moved from the high and went down here, because we won't use that one, or even if you can use that one, let me erase this one. Even if you use this one, is fine. Even if you use this one, they went up, they went down, they created what? Lower high. They went up, almost equal low. That's why didn't want them to use this one. Almost equal low. They went down, created lower low. They went up, created lower, higher lower. I mean. So for here, how did we saw that the market will change? It's likely to change. They break the market structure here. After they broken that market structure, we know that the market is likely to sell. They went down to break that market structure. When they go up, we look for any sort of end that we can find, but we look for more of that on the next video. Then they went down to sell. So now we want to understand how did they start create, how did they start create the trend, that the trend change, the changing of the trend to a buy. So they went down here, created our lower low. They went up, created our higher low. They went down, created our lower low. Let's zoom. Let me if I zoom, this thing won't make sense. Okay, let me continue like this. They went up, created our high low. They went down, created our lower high. Here's where we saw that the market is likely to change. When they create lower high, this low is higher than this one. So now we know the market is likely to change. Another thing, they broke the high that was created there. They created a higher high. After they created a high, that's where we start looking for entry. Entry, entry after they created that. They created a lower high, now they went up. That's how they changed the market from a sell market to a buy market. So these things, the basic knowledge that you must have in your mind. You must create those step high highs, lower lows, lower highs in your mind before you're taking any trade. Remember that the trend is your friend. And if you are trading against the trend, you'll die. So the market is your friend. If you do the trend is your friend thing, you won't go wrong. Remember, you can the high probability of using a high time frame, you can get more risk reward ratio if you're using a bigger time frame. So that's how we identify swing point. That's how we identify turning point of a market. Remember that you can say it's turning while it's not turning. You must play your cards very, very fair. I will be touching all of that on the next video. So don't forget to click subscribe to channel and share the video as you can.